Good morning. Market capitalization is the total market value of a publicly traded company. We take the number of shares outstanding and we multiply by the stock price. It's a very important measure because it's the best assessment we have of how investors value a company. And a company with a large and rising market cap can raise new capital much more easily. They can go into capital markets and sell more stock at higher prices, or they can borrow money at lower yields. That in turn fuels even more research and development, more growth, new factories, new product lines. So this news here is very significant that BYD, a Chinese car maker, has a market cap that is bigger than Ford plus GM plus Volkswagen combined. They're also taking big market share from Tesla, both here in China and across the world. BYD shares trade in Hong Kong, and here is the 5-year chart for them, and their market cap is 1.3 trillion Hong Kong dollars. 1 HKD is worth 13 cents, so the market cap for BYD is about $169 billion. Ford Motors cap is 40 billion. General Motors is at 49 billion. So BYD is worth Ford plus GM times 2 already. The good news for BYD just keeps coming. The recent spike in their stock price came after the announcement that they've developed a new battery and charging system that can charge an electric car in about the same time it takes for a regular car to fill up with gas. The system gives 400 kilometers or 250 miles of range and 5 minutes of charge, and BYD will be selling cars with this new tech starting next month. The new system puts BYD far in the lead with respect to charging times. The metric used in the industry is km per charging minute. And BYD's 400 km in 5 minutes means each minute is good for 80 kilometers. Li Auto is another Chinese maker. They can go 500 km on a charge, which lasts 12 minutes. So their number is 42. Tesla is at 18. Or 275 km in 15 minutes, and that's one of the problems Tesla's got now in China. Tesla's year-over-year sales from last month were down 49%, and at under 31,000 units was the lowest monthly sales number since mid-2022. This is the trend for Tesla in China, with orders falling for 5 months in a row. But Tesla's got company. These charts are for the top 12 top-selling car brands in China by market share. And what we're looking at here are the trend lines, the growth in market share. BYD is killing everybody in the top spot. Tesla is in the 11th position, and its chart is similar to most of the other international brands, trending down. VW, Toyota, and Honda are down sharply. Mercedes, BMW, and Audi down, but not crashing. Geely, number 4, and Chery at number 8 are other Chinese brands. Note here too that these numbers are for car sales in China of all engine types, gas, hybrid, or electric. And BYD is also snapping up market share globally, selling over 60,000 cars last month, another record for the firm. Tesla is one of the most innovative companies we got, and they can't keep up with BYD. The middle column is the price change since December 2023. Tesla's Model Y and Model 3 have been discounted at 9% and 7%, but BYD is making money on all their models, even while giving bigger discounts. The column at the right is the Chinese average price for these models in renminbi. Converting to dollars, Tesla's models average over 33,000 per vehicle in China. BYD's Song, with all the options, is $21,000. The Seagull is also popular here, and when Detroit engineers tore down the Seagull last year, they were so terrified by the quality and by the price that they called up their friends in Washington to get Chinese cars banned. The Seagull costs under $10,000 here. And the concern back home is that even at twice that price, the Seagulls will sell as fast as they can be unloaded from the ships. On these new fast charging models, BYD is building a new charging infrastructure, and the price points on these vehicles are higher at about $38,000. So on this product line, BYD is competing on a different field than for their other models. They're not competing on price or on the newest bells and whistles because their lower cost models already have those. This new lineup is positioned to go directly at buyers who prefer gas-powered cars because of the convenience of fill-up time. They're not budget conscious, in other words. These buyers are willing to pay more if it means they're not waiting around for their car to charge. Two important points to hit here a little harder then. Chinese companies are innovating fast, and they're taking new market segments just by figuring new ways to build things differently. In this case, BYD needs to also build new infrastructure for the charging of these new batteries. But once that's done, they will compete on price. In 3 years, BYD will be discounting these and taking whatever market share is left. Same car, same charging time, but when BYD no longer has to recover their capital spend for the new charging stations, they'll cut the price. That's their system. This is Feng Huang in Hunan province. Be good.
No man can serve two masters. You cannot serve God and money. So do not be worried about your life, what you will eat, or what you'll drink, or what you'll wear. Seek first the kingdom of God and his righteousness, and all these things will be added to you.